So I think for me in the last year, the most important lesson wasn't how I get something done. It was not getting two things done forcibly and violently that taught me the lessons. And those lessons are basically, you're going to find them very simple. It's two things. Just trust your gut. You know, your instinct, your instinct is usually correct. And a lot of times in a transaction, your instinct might show you one thing and the diligence might get you over that, but it's not going to negate your instinct. So one thing, that I learned, which is one of my main things, is to just trust your gut because it's usually right. And the second thing that I learned, I think the hard way, is not all money is good money. Sometimes, getting a transaction done isn't maybe the best thing for all of the employees of the company and the owner of the company.
Welcome to another video as part of our interview with bankers in the US region. So today I'm pleased to introduce Mr. Seth Yaketan. So a highly experienced corporate finance and M&A professional with over 30 years of experience helping companies raise capital, execute strategic transactions, and successfully exit businesses. So to date, he has raised more than 1 billion funding and sold more than 22 companies across different sectors in life science. He's also the co-founder and partner at Yakatan Associate International, which is a corporate strategy and a merchant bank. So welcome to the show, Mr. Seth. Nice to have you here.
Thank you. Nice to be here. Appreciate it.
So to start with, I would like to, for our viewers, I would like to ask this question, can you give a brief introduction about yourself, your background, and how you came into this segment of merchant banking?
Sure. I think ultimately I'm an entrepreneur first. I grew up in a household of a guy who was born into an orphanage and became a very successful serial entrepreneur. So, I had my first job when I was 9 years old. I don't think I've ever had any less than 2 jobs. I think working in M&A or deals, for lack of a better description, is a lot of discrete project management because you're usually working on 6 or 7 things at a time. So, I think developing a skill set where you're doing a lot of things early is helpful. But I took a fairly traditional route. I went to college. I spent 4 years as an analyst with a venture capital firm. I went back and got a master's in finance and statistics. I then worked for about 9 years for a fund which was owned by a commercial bank, which essentially did leverage finance for private equity firms and sell-side M&A. And then in 2001, I stepped out and have been doing those kind of things on my own now for 25 years. So that's my story, I guess.
That's a long career you're having, and I'm sure that you're loving it. That's why you keep doing it again every day and day in, day
out. Yeah, I mean, it's not really work for me, and the phone rings. So, at this point, it's fun, and I think somewhere they said you need 10,000 repetitions to become an expert at something. So after this long, it's kind of a reflex, and sometimes you can just almost prognosticate what the outcome is going to be based upon the personality type of the customer and the expectation of value.
Great. So I'm sure that you have worked on a lot of deals. So among the recent deals, I just want you to share some notable ones. It can be a M&A or it can be a capital raise also, something which you felt very interesting.
Whatever my last deal was the most interesting, I think. You could go back and look at your track record, and for me, it's just about consistently trying to get things done. 2025 was actually a very interesting year because of the two things that I didn't get done. I had a learning this year where I had in August of 2025, I had two different but both very large transactions that were on the 1 inch line, and both of them simultaneously exploded in a bad way, kind of at the same day for different reasons. So I think for me, in the last year, the most important lesson wasn't how I get something done. It was not getting two things done forcibly and violently that taught me the lessons. And those lessons are basically, you're going to find them very simple. It's two things. Just trust your gut. Your instinct. Your instinct is usually correct, and a lot of times in a transaction, your instinct might show you one thing, and the diligence might get you over that, but it's not going to negate your instinct. And so one thing, that I learned in 2025, which is one of my main things, is to just trust your gut, because it's usually right. And the second thing that I learned, I think the hard way, is not all money is good money. And in our industry, sometimes, getting a transaction done isn't maybe the best thing for all of the employees of the company and the owner of the company. So understanding that it's not just about the transaction, and there's a humanistic component to it, and that not all money is good money, was a lesson that I had to learn the hard way this year. So I think 2025 was more about learning from failure than learning from success.
Yes. So I've read somewhere that whatever situation you are in, the best people always learn something from that. Whether like you are in a good situation or a bad situation, that learnings will keep you motivated to go to the next step and make sure you're not repeating the mistake.
True. I like to tell people that the only way that I learn the lesson is through repeated blunt force trauma. So, what I like to tell people is you don't just, younger generation today, wants things quickly and wants success and doesn't want to work that hard. The only way that I've really learned the lesson is by miserably and spectacularly failing. So that's me. Maybe I'm just wired differently, but yeah, you got to take something out of it.
Yes, and it's all about like not giving up on like what you're doing because of those mistakes, and keep doing it forward. So the next question is
let's stay there. Yes and no.
Yeah.
Right. Yeah. So there's another thing that we kind of have to bring up that I talk about a lot. In the deal, private equity, venture capital, investment banking world, there is a hustle culture. The harder I work and the more people I call and the harder I try and the more I force this thing onto something, I'm going to put my force of will into it, and it's going to change the outcome. One of the lessons that I've learned, I call it the law of attraction.
Yeah.
If you like another human being and that human being doesn't like you, the harder that you try to get that person to like you, the more you're going to repel them. So this whole notion of what I call forcing versus allowing, you have to put in the time, you have to put in the reps, you have to put in the work. But after a certain point, you're forcing. No matter what, we find a company and you take it to market, and you find 100 people and nobody's interested. Right? Okay. Well,
that's a hard.
Okay. Well, maybe there's something wrong. So you retrench, you reprice, you find it, nobody's interested again. Right. At that point, you're now forcing. You're forcing. So, one of the big lessons that I've had to learn in the context of my journey is you have to put in the work. But there's a line that you have to cross between forcing and allowing. And what I find, the older that I get and the more transactions that I do, the less I force it and the more that it just occurs organically, and then I make it happen. I allow it to occur. usually the better the outcome is. So, for some of your viewers and listeners and some of the younger people out there, there's no substitute for hard work. But when you keep trying to force that deal to happen, it's not going to happen. You have to let it go. So that's another big lesson you have to learn, I think, at least one that I've learned. And the more I employ it, the more I reap the benefits of that lesson.
Like, I actually had one question related to this in my mind, which you already answered. So one of my questions in my mind was that, like, what's your advice for someone new in the investment banking domain, someone who just college passed out and they are looking into getting into investment banking? What's their advice? What's your advice to them? What was one of my questions which you already answered?
Well, there's some other answers to that questions because, investment banking is a very hard industry to get into. So, for young people, I do think there's a hustle component that you have to have. You have it's kind of like being the youngest member of a sports team, right?
Mm.
You got to be the first person on the pitch. You got to be the last person off the pitch. You got to pick up the balls, right? You got to defer to the people that have the seniority. And I think the biggest thing the biggest piece of advice that I would give a young person getting into investment banking is to try and find some mentors. Try and reach out to some older people that have been doing it before and ask them for advice, whether you do something for them for free, like you cut their grass or you paint their house or whatever, or maybe you do a project for them. Because I think the big disconnect or the big belief is, I'm going to go on Wall Street and I'm going to get really rich. That's not a good enough plan. And I think you really have to understand if you like it, right? So getting a job and making a lot of money that you don't really like is a job. So I think the secret to my personal success is that I don't believe that anything that I do is work, right? Work is getting on my hands and knees and digging a ditch and getting bloody knuckles and going into a coal mine and doing construction. I mean, that's work. Talking on the phone on a headset and getting on a video, it's like acting. It's not work, right? So I think the other thing for a young person is figure out a mentorship group, understand exactly what the job entails, and really ask yourself, do I want to do it? Because if you're just doing it for the money, right, that's not enough. Because there's going to be a kid behind you who's hungrier, who's more aggressive, who loves it, who's going to outwork you because they don't think it's work. So I think understanding what it entails and what the job is and figuring out kind of a panel of advisors is probably the way to do it, because it's tough to get in. It's very tough to get in. It's very competitive. There's a lot of young, smart people out there, and it's harder. So you also have to find somebody who is going to like gritty, right? There's one or two large consumer private equity funds in Los Angeles that I talk to all the time. You want to know why? They have problems. Okay. They call me. They wouldn't hire me because I didn't go to Stanford or MIT or Wharton or Harvard. So you also have to understand that discrepancy as well. I have a small chip on my shoulder about that.
Okay. That's a great piece of advice which you were telling, and I was reminding about something which my teacher told me a long time back. So in Indian culture, it's about like you have to find a guru and you have to find a teacher and follow that teacher. The same thing which you also have to like find a mentor, like who can help you in that process to make you an investment banking, like to help you in that process. Thanks a lot for that, Seth.
It's also another lesson, which is that the greatest lesson that I teach people is give something with no expectation of anything in return. That's the greatest gift that you can provide, and the karmic destiny that will provide you moving forward is 1,000-fold. If you call a managing director of a large global investment bank and you say, "Hey, I want some advice," right? Can I take you to lunch? Or if you meet somebody at a conferences, I can't talk enough about conferences. If you meet somebody at a conference and you're intelligent and you're young and you're articulate and you say, "Can I please take 15 or 20 minutes of your time? Can I ask for your help?" Or can I do something in exchange for that? You might be shocked at how you humanize that interaction. Okay. If a young person, and I'm doing it on Friday, if a young person cold outreaches me, and says, "Hey, I'm trying to figure it out," they don't say I want an internship. They kind of say, "Hey, I'm just trying to figure it out." I'm usually going to give that person 15 or 30 minutes of my time and say, "Hey, how can I help you?"
Yeah.
So don't be shocked by the fact that humanity will potentially pay it forward.
Mm-hmm. Great. That's great, Seth. Moving on to the next question. So I'd like to understand, what's your top focus for 2026? Like, is there any priorities you are having, and any reason for those priorities?
Um,
Any new business you're getting into, or like any kind of verticals you are getting into?
I'm deeply involved in the life sciences, wellness, and cannabis sectors. Um, my focus, if you look at my LinkedIn, purports me to be the most influential person in the world in cannabis. So let's continue to perpetuate that myth.
Mhm.
I think that for 2026, I'm really looking at the North American and European recreational cannabis markets. If the Trump administration moves forward on a Schedule 3 for cannabis, I do think you're going to see a wave of activity. Um, January, from an M&A and transaction perspective in cannabis, was a robust month.
Mhm.
I think you're going to see that an extremely robust month. I think there were 8 deals that happened, and I think that pace is going to continue into 2026. I am in the middle of 5 or 6 conversations like that now. I think on the biotech side, um, you've kind of been in a bit of a nuclear winter there from a funding perspective for 2 to 3 years. It seems like that thaw is coming over. For me personally, on the merchant banking side, I do believe that there's a hole in the market in um, smaller, kind of sub $300 million revenue drugs that either need to be developed or need to be warehoused because they're too small for people to really get interested. So I do think, personally, from a private perspective, we're putting together some groups to acquire and roll some of those up and develop them. So that's been kind of interesting. I work with a very interesting group out of New York called Messaging Lab. That's probably the leader in the application of biology into industrial applications. And some of it is synthetic biology, some of it is just biotech into CPG. And I think the transformation of these technologies into more enabling commercial scale solutions for better, cleaner products with less waste, I think is part of the future story. I don't do a lot in AI. I don't do a lot in robotics. So, my core areas are those three. And I think you're going to see, continued growth around them. And I'm very excited for what's ahead.
That's great, and all the best for that. So, to an added question to that, so when you're doing M&A, or when you're doing capital raising, like how are the tools helping you? I know that there are multiple data tools in the platform. There are multiple AI tools are there. Data platforms are there. Are you using any of them, or like how do you feel like using such tools? How is it impacting your work?
Data is super important in what I do in all of my verticals. Um, there's not one single subscription tool set that I use, just because I'm in a lot of very esoteric verticals, and I'm also in a lot of private companies, and that data isn't always readily available. It's usually proprietary.
Yes.
So, um, so I rely on a lot of sources of information to do that. In each of the verticals, I think data is very important, and anyone can generate data. I think the trick is interpretation. So as an example, just to talk about cannabis for a second, okay? There are 2 investment banks that put out weekly reports that I consume. There are 5 investment banks that put out quarterly sell side research that I consume. There are 3 different subscription data services that I consume. So what I do personally is I take all of that information and I put it into an analytics dashboard, which is customized for myself. And I look at that every Sunday because for me, with the positioning that I have in the sector, people are expecting me to understand what's going on in 15 markets in the United States at all times, in Canada and Australia and Europe. So I need to know where spot pricing is for product. I need to know where the last deal printed from a cultivation perspective and from a retail perspective, from a pricing perspective on senior debt. So for me, the data and the understanding of the data and the intersection of the data has allowed me to create kind of a proprietary repository. I don't think there's anything that unique about it, but it's also the interpretation of it, which I think is interesting. But to your point, it's super interesting. Just to talk and continue, one of the things which was very, very interesting in the United States until the end of last year was the emergence of hemp-based THC beverages and the growth of that sector. It was on fire, and because all of the companies were private, there was no data available. There was no data about consumer usage. There was no data about sell-through. There was no data about who raised money. There was no league tables for revenue. There was no data about what valuation. So what my team did over the course of last year was we put together our own proprietary data set by talking to 75 companies under NDA. So, sometimes for me, when the data isn't available, I'm in a unique position in certain markets where I'm able to, customize my own data. We just use it for our own purposes. I'm not in a position where I can monetize it or resell it, but the data is super important. Just one more thing, comparables are really important, right? So, one of the things that I will do is I'll scrape available databases, like FactSet as an example, on transactions. I've spent because of the convergence of industries, I've spent a lot of time looking at the global alcohol and beverage market from a large public perspective, but also from a private transaction perspective. So, one of the things that my team did is in the fourth quarter of last year, I want to say we scraped 1,100 transactions that had happened in the last 4 years to try and come up with median mean valuation multiples of where transactions traded from an equity perspective, a deal, and from an M&A perspective in terms of revenue and EBITDA. And then out of that, we selected a sub cohort, of maybe 12 deals that we thought were relevant for what we were looking at. So, what we try to do is use data to come up with an empirical basis of what things are worth, or to create, and I'm using a friend of mine's nomenclature, but the ZOPA, the zone of potential agreement, right? I think I'm very good at understanding where market is for a transaction by talking to all the private companies, by looking at where the public companies are, and by seeing where the investor demand is. That will usually tell you, okay, what's the box look like? And, are we going to market with something is in the box, or is it below the box, or is it above the box? And that's kind of my approach. So.
That's great. I'm pretty sure that you're putting a lot of effort there, like making your own dashboard and doing a lot of research out there. And that's where the actual results also would be coming out. So that was my last question. So I would like to thank you for sharing these insights with us and all the viewers, and sharing your experience with us today. It was a pleasure having you on this podcast. Thanks, Seth.